Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, thanks for that. Well, the stock on my radar is Strides Shasun. That's the stock that I'm tracking today. It's seen a steep fall and for many a surprising correction in 2018 with a fall of over 50% on a year-to-date basis. The reasons for the weakness, it seems, are quite wide. They range from a weak Q4 performance where the company reported a loss this time round of around 4 odd crores to a consistent margin weakness. If you look at the numbers for FY18, the margins were 14% versus 19% in the previous year. Weakness in the past few quarters was quite obvious in terms of the margins. Now, the other big factor has been the institutional business, where it's seen the tenders fall up to 50% in some of the quarters gone by. Plus, there is price pressures in the US market, which has really impacted business for the company. They've also made changes to their strategy. So, for example, Strides Shasun has exited what seems to be a high margin or a high growth India formulation business last year. They sold their business to Eris Life Sciences, and there are concerns that the company is constantly undertaking some kind of restructuring, which is resulting in the perception of the company probably losing focus on its core business. Now, some key factors, however, to look forward to or to watch out for will be first the recovery in the US markets. The company has guided for around $120 million in terms of sales in FY19, plus a recovery in the institutional business. The company, for example, recently received approval for an anti-malarial drug. Positive inspections from the US FDA, considering that they have a good track record and growing presence in other developed markets such as Australia. As well as Arun Kumar, the promoter, who is now playing an active role in the business after stepping down from an active role just a year and a half ago. Now, brokerages were very negative after the Q4 numbers. For example, Macquarie, which has always liked the stock for a long period of time, downgraded the stock to neutral and cut the target price to 398. Motilal continues to have a buy rating, but with a lower target price of 481 rupees. In terms of valuations, the company, after adjusted for earnings downgrade, is trading at around 14 times to 15 times FY20 price to earnings. But before I wrap up, a quick disclaimer: this is not a buy recommendation. These are just the factors for you to make a decision in terms of whether it should be a lucrative opportunity.
Okay. Thank you very much, Ekta, for giving us, putting all those points in place. And of course, an important disclaimer. We are looking at stocks that have fallen and we are asking, is it still a value trap or is it a value buy? And that question on Strides Shasun to Amey Chalke of HDFC Securities, who has joined us in the studio. Good morning, Amey. Thank you very much. All the negatives that Ekta reeled out, margins falling rather badly and constant shuffling in terms of selling off businesses, is the worst over for the stock?
So I believe one should wait for 1 or 2 quarters, because fourth quarter was a kind of a shock for everyone. We were not expecting US business to halve in 1 quarter itself. So going ahead, the outlook also remains weak from the management side. So it would be better if we see the consistency in their operational numbers before start investing.
So when do you expect a turnaround? Because we did see a loss last time around. When do you think the turnaround could come through? So
operational turnaround we are expecting in the second half of FY19, when they would be launching Tamiflu in the US market.
Okay. And in terms of a stock price, I mean, it hasn't done anything for investors for a long time. You think that could be the case going ahead as well? What's your target price?
So our target price is 420, and we believe that EPS is around 18 rupees. So even on that EPS, it is trading around 22 times.
Current year, yeah.
So we expect first them to start showing them numbers, then we would be able to again take a call on the rating.
Okay, so according to you, it's still a value trap. To become a value buy, you will have to wait to see the earnings improve. Okay, Amey, that's the verdict from the expert. Yes, value has fallen. Ekta told you the reasons. She was hunting for value, but Amey says no. He is as yet not convinced that it's a value buy. But Amey, since we have you with us, your take on Aurobindo. Today they got US FDA approval for that bacterial injection. makes it a buy at all?
So it is buy with a target price of around 750. So there we were expecting stock to react strongly to this news because this ertapenem is 400 million market. It will add around 10 to 15% kind of earnings in FY 19-20 because it will remain a good niche opportunity for this company.